Hello and welcome to the lecture for Chapter 8. In this chapter, we take a look at internal control specifically as it relates to the IT environment. And again, as we did in the previous chapter, we're looking at this through the eyes of an auditor. So what interest does an auditor have in how the IT environment is set up in terms of internal control? So we'll talk about a variety of different things. I think the most important thing out of this chapter is segregation of duties within the IT department. That's Learning Objective 8-3. I'll focus on that. And we'll talk about test of IT controls. We're not going to cover generalized audit software because you're covering that in Accounting 450L, your other course related to this course. So one of the things to think about in terms of an IT environment is that there are both opportunities and challenges associated with that. Virtually every company has some level of IT environment, whether it's QuickBooks or if it's something more significant than that. So the opportunities would be you have access to more data. You can have bigger sample sizes. You could look at all transactions. There's also additional controls that can exist in an IT environment that couldn't exist in a manual environment. Check digits, validity controls, things like that. There are also challenges. So there could be hidden foul play. Imagine that you're able to directly access the SQL database that's behind Microsoft Dynamics. Well, you could make changes to account balances and there would be no audit trail. So there's some hidden dangers there. And being able to analyze that requires specialized knowledge, so something beyond just understanding accounting. Now, very small businesses can often use off-the-shelf software packages like Peachtree or packages like that you can get at Office Depot or sometimes at Costco, places like that. You can also have even more simplistic systems like electronic checkbooks, which Quicken is an example of that, or general ledger systems like QuickBooks that aren't as robust as, say, the software that we used in Accounting 405. Larger businesses are going to have a different kind of system where they have clients and a server. So they'll have centralized software or cloud-based software, and then workstations that both provide input and are used for output of that system. Enterprise Resource Planning, that's what ERP stands for. We talked about that in Accounting 405 as well. That really deals with expanding the system beyond just accounting and having it also do production planning, purchasing planning, inventory control, payroll and employee related topics. So it can customer relationship management. So a whole variety of different functions within the company can all fall within that software. Dynamics is an example of an ERP system that we work with. So some major components of IT system, there is hardware. That's, of course, computers, peripherals, printers, those kinds of things used for input, processing, storage, and output. In terms of software, there is system software. That's what runs the computer. So that would be, well, I'll talk about that more in just a minute. And then there are a variety of applications, which we'll also talk about more in a minute. There is data. That's the inputs and outputs of the system. So transactions, activities, it would include both financial information and non-financial information like hours worked, parts produced, pounds shipped, those kinds of things. Of course, people are a component of any IT-based system. It's of course run and used by people. That's both the users of the system, so maybe accounting staff and production staff, purchasing staff, and then also the IT staff, which we'll look at more closely here. There are procedures, so there are ways that things are done. I talked in the last chapter about the importance of an accounting manual. Well, it's equally important in an IT system that we have that documentation there. And then there are networks, so all of these computers are connected to one another so that we can share data and resources. So there are some efficiency advantages in that, but also some challenges in terms of protecting access to information. So the system software is a program that controls and coordinates the hardware components. So how things are stored uh, on hard drives, how information is printed out, those sorts of things. Some examples of operating systems: Windows, Macintosh has a proprietary operating system, Unix is an open source operating system, and then there's application software. So that ranges from things like Excel and programs like that to QuickBooks or Microsoft Dynamics or other kinds of software that a company could purchase. So our focus here is on the application software. The one thing I would have to say as an aside about this is it's really important, and I've had some unfortunate experiences in my past where there are conflicts between the application software and the operating system that can cause unreliable results. So it's very important to make sure that both the operating system and the application software are updated regularly so that they stay in sync with one another. So transaction processing, that's supporting routine business activities like invoicing customers, entering orders, receiving cash, purchasing inventory, receiving inventory, converting inventory into finished product. All of those kinds of things are done through the software. So again, that can range in size from something like QuickBooks, which is good at kind of basic service companies or maybe merchandising companies, not as robust in terms of a manufacturing environment, to a company-wide ERP system that is more complex, more expensive, and all of that. So regardless of what type of system you have, there's a couple of different ways that you could process transactions. One would be in a batch system. That's where you collect a group of, say, accounts payable that need to be entered, and you enter them as a batch, and the system requires you to do that, versus real-time processing, transaction by transaction, that's automatically updated. Online transaction processing would be an example of having remote locations that tie into your system and automatically update orders received or orders shipped or things like that. So in traditional IT systems, each computer application has its own separate master file. So that's changing, and the problem with that is you had redundant information stored in several files, and so synchronizing them was a challenge. So really all systems now rely on databases. So those databases are often kind of the back end, and the software is the front end, if you think about it that way. So we experienced that when we worked with Dynamics, where we could enter a customer one time and then a variety of different portions of the application could access, say, the customer's address. So we could access it when we invoice the customer, so we send their invoice to the right place. We access it when we send the customer a month-end statement. We access that same address when we ship the product and need to print a bill of lading. So it eliminates that kind of redundancy and improves both efficiency and accuracy. So the one issue with that is now if we have information stored centrally, then we need some control to the access of that. So both for the users of the system and for the IT staff. So somebody, as an example, that's doing alterations to the program shouldn't also have access to be able to make changes directly to the database. So in terms of networks, the definition of a network is computers linked together. We could have a wide area network. That's an example of that would be an intranet. So the school is a wide area network. You can log on to the network from any computer or your own computer or your phone. That's an example of a wide area network. A local area network, actually, let me reverse that. A local area network is within a company. Wide area network is outside the company. So the internet is an example of a wide area network. Intranets and extranets are examples of local area networks. Local area networks will use a firewall which regulates who can access it. Good companies will often have two-part identification to kind of put more barriers up to inappropriate access to the local area network. And then, of course, there's electronic commerce. EDI stands for Electronic Data Interchange. A lot of companies that work closely with one another will exchange information electronically rather than sending paper. So if I have a large customer that I do a lot of business with, I may receive orders from them electronically. So they'll submit the order. It'll go through a check, and then it'll be automatically uploaded into my system. The benefit there is efficiency. I'm not paying somebody to type in what somebody else sent to us, and reduced errors. So we're not going to accidentally type in the wrong part number, that sort of thing. So IT architecture, that's the client server configuration that can have several tiers or layers to it. A three-tier configuration separates the presentation of the data, the application processing, and then the data management functions. So internal control in IT. So the important thing there is that separation of duties is recognized within the IT staff. So not everybody in the IT department should have access or ability to do everything. And I'll talk about that more in a minute. It's important to have clearly defined responsibilities, so who is in charge of what and who's responsible for what. It's important to have physical controls, so the access to the server room should be limited to only those people that need to have access to that server room. In my old company, 2 people had a key to the server room, me and the person in charge of the servers. The cleaners, the janitors, couldn't get access to that room. And it's also important to have access control. So that is how you log into the system, how complicated your password needs to be, how often you need to change your password. 2-part identification is part of that as well. And then there could be augmented controls written into computer programs like approvals, validity checks, things like that. So the way an IT department is set up, there is one level that is information systems management. That's usually the chief information officer or sometimes the chief technology officer. That's the person that's responsible for the overall IT architecture in the organization. There is a job for system analysts. That's the person responsible for designing how the system should work. So if it's customized software, it's kind of mapping that out. If it's modified software, which most people buy software and then modify it, it's looking at how that modification should be done. Then there are people that program applications, so either write them from scratch or alter the ones that exist. They have to have a detailed knowledge of how the business processes function in order to be able to do that. There are database administrators. Those are the people that make sure that the database is properly backed up and that it's maintained properly so that we don't have errors or problems with that. There's data entry people. So those are people that are actually entering information in the system. And then there's IT operations. Those are the people that make sure the servers are running properly, that they're backed up properly, and that everybody's workstations work properly. There are data control. Those are people that review and test procedures and monitor that. They look at IT logs, so making sure that that people aren't logging onto the system that shouldn't. They would look for evidence that somebody's logged into the system after hours if that's not appropriate. And then there's system programming. Those are people that are responsible for the operating system within the company. So history shows that the person responsible for fraud in many situations set the system up and controlled the modifications. So if you set up a system and you control how it's altered and nobody quite understands what you're doing, well, that means you could do something inappropriate and cover your tracks. So segregation of duties is really important. You want to make sure that the people that have the ability to change the programs in the system don't have access to be able to log in and do data entry. So as an example, they can't steal money and then create a change in the system that covers the tracks that they've stolen money. And then computer operators should be separate from custody or detailed knowledge of the program. So those two functions should be completely separate from one another. So here's an overall pictorial level. So the top is general control activities. So those are all controls related to computer applications. So validity checks, check totals, things like that. There are application control activities. So those are, what do we do with computer exception reports? What do we do with user reports? And then there's user control activities. So those are manual checks, comparing output against source data, things like that. So general control activities include acquiring the system, developing it and maintaining it. So what kind of software are we going to get? I can't stress enough how important it is when there's a change to software that it is thoroughly tested against all types of transactions that you could imagine. So it's devastating for a company to make changes or get a new system, not test it properly and have it fail. That means that your business is often grinds to a halt. So that's really, really important. I've been in companies that have had that happen, and it's definitely not fun. It's important to have documentation for any and approval for any changes to existing programs or systems. What it's getting at here is that if you allow yourself to be in a position where an IT person could make changes to programs, so change the code, if that's not properly documented, then you're at risk if that person leaves, if that person gets hit by a bus, or whatever the case is. It's really difficult to determine what they did and why they did it and make changes to their changes, as an example. So documentation is key. Make sure access security, both physical and electronic, and again, I mentioned before, I said two-part identification, I meant two-part authentication. And then IT operations controls, so backups, protections against malware, viruses, all of that. So at the application level, we can have input controls, and if we're running a batch system, which has some unique advantages, we could have batch controls. So in terms of input controls, there could be a limit test. So maybe I shouldn't be able to enter an order from a customer that has a dollar amount over $1 million, because that would be highly unusual in my company. That would protect somebody against, hitting the zero too many times and then saving the order. A validity test, that is, am I entering a customer number that exists in the system? Am I entering an item number that exists in the system, making sure that the information I enter is valid information? Allowed character tests, that's where I can say this field needs to be numeric, or it needs to be alpha, or it can be alphanumeric. That's to keep people from entering a capital O instead of a 0, that sort of thing. And then not allowing something to proceed if it's missing data. And I think you experienced that in Dynamics, where some fields were deemed to be required and you couldn't go past that if you didn't enter them. So batch controls, there's some benefits there. So batch control, say I'm doing a whole group of invoices from suppliers, and I'm going to input those today. So a lot of times what companies do is they require things to be done in batches like that. So the disadvantage is they're not posted until the entire batch is entered, so you don't get real-time updating of those invoices. But a lot of times the controls that you can have in place kind of outweigh the timeliness. So one could be, let me count how many invoices I'm putting in. I'm entering 57 invoices, say. And then when I finish the batch, I run a report before I post it, and that report tells me you've entered 57 items. That ensures that two pieces of paper aren't stuck together and I don't enter both of them. I could have a control total, so I could run a tape or run a total in Excel and say the total amount of this batch is $813,017.22 as an example. So I'm manually adding all of them up. And then again, the report at the end could tell me that's how much you entered. Then the last one is hash total. And this is really interesting. And I use these wherever I could. So maybe I will add up let's say I have an ALF or a numeric customer or vendor number, and I'm entering accounts payable. So I have a numeric vendor number, and I could add up the last 2 digits of all of the vendor numbers of everything in that stack. and I get a meaningless total. It doesn't have any significance, but then I can have the system do the same thing, and it would tell me if it equaled what I manually added up. So again, that is so that I don't transpose a vendor number. So it helps me make sure I'm not entering an invoice with an incorrect vendor. So each of those control totals help ensure that I'm going to enter that batch correctly. So an important thing about that is, well, then you would ask as an auditor, what are the procedures if what you get from the report at the end of entering the batch doesn't equal the count or the totals that you had in advance? How is that resolved would be a good question to ask. So user control activities, they're designed to test completeness and accuracy of the transactions to ensure reliable processing. And again, here we talk about the reconciliation of the control totals relative to what you calculated initially, and making sure, usually it's a good idea if you have a discrepancy, that somebody else looks at that and signs off on it rather than the person doing the input. Techniques for testing application controls, so we could audit around the computer, meaning look at a transaction, determine how it should have impacted the system, and then look at the end result and see, did it indeed do that as it should? We could manually test computer controls. So if the client tells me you can't enter an order more than $1 million, or you can't enter a vendor number that doesn't exist, okay, well, try it. Try entering this, try entering that, and see if it gets rejected. So verify that that's true. And then we could use the system to test controls. So we could tag and trace transactions or look at programs themselves if we need to. So that's the end of the lecture on Chapter 8. I will talk with you again when we start on Chapter 10. Thank you.